Welcome to the Kentucky Public Pensions Authority Invoice Training Series, presented by the Employer Reporting, Compliance, and Education Division. This video will provide information on the member pension spiking refund invoice. In the 2017 General Session, legislation was passed amending Kentucky Revised Statute 61.598. This amendment changed the pension spiking law for members with a retirement date on or after January 1, 2018. A pension spike is when a member's credible compensation has a greater than 10% increase when compared to the immediately preceding fiscal year. However, if that increase is due to an approved exemption, then it is not included during the pension spiking determination process. For the employees who participate under this amendment, the pension spiking review begins on salary reported for July 2017 and later. Fiscal years prior to this may be in the member's final compensation, but will not be reviewed for spikes. This amendment of the pension spiking law states that if a spike is detected and it falls within the member's last 5 fiscal year salaries used in determining their final compensation, then KPPA will reduce the credible compensation on the fiscal year that spiked to the maximum allowed 10% increase. The member's retirement benefits will then be calculated on the final compensation determined using the revised salary. This reduction of salary may also necessitate a refund of the employee contributions on the difference between the actual and revised salary. Following the identification and adjustment of a pension spike, the employer is issued a notification via U.S. mail of the member's spike. The employer must return the included Form 6487 in 60 days to inform KPPA whether the spike is or is not due to a statutorily allowed exemption. If the spike is not due to an approved exemption, then the salary will remain at the revised amount and KPPA will refund the employee contributions and interest on the variance. There are currently in statute 8 approved exemptions that allow for a member's salary to increase more than the 10% maximum and not be deemed a pension spike. They are a bona fide promotion or career advancement, overtime payment during and as a result of a state of emergency declared by the President of the United States or by the Governor of the Commonwealth of Kentucky, overtime payment during and as a result of a state of emergency declared by a local government for which the governor mobilizes the National Guard, overtime payment due to a state or federal grant, grant pass-through, or a similar project. Wages paid for the first 100 hours of mandatory overtime required by the employer of the individual employee within the fiscal year, the lump sum payout of accrued compensatory leave at termination, the lump sum payment of alternate sick leave, and the variance in salary due to a leave without pay period in the preceding year. If the employer provides evidence that the spike was due to one of these approved exemptions, then KPPA will recalculate the member's benefits on the actual salary reported instead of the revised salary and repay the variance retroactively from the member's retirement date. The member pension spiking refund invoice can be accessed through the Invoice module on the Report tab in Employer Self-Service. To view the invoice, click the invoice number hyperlink. The invoice will be a multi-page document containing the refund information for a single employee of your agency. These invoices will never contain multiple employees. On the first page of the invoice, the Employer Information section provides the name, employer code, and address for the employer. The Invoice Details section includes the invoice number, due date, member information, and the amount due to be refunded. Following the details are the payment instructions that give a brief explanation of what the refund is for and how to process the refund for your specific team. If you need further assistance in processing the refund, please call our employer hotline and speak to a team representative. The remaining page of the invoice contains the details of the refund. Following the employer information and invoice detail information identical to page 1 is the last 6-year fiscal year analysis. This section provides information on the fiscal years used in the member's final compensation, including the fiscal year or years containing the spike. The fiscal year that spikes also display the revised salary amount that is the reported salary capped at the 10% maximum, which was the salary used when calculating the member's retirement benefits. The amount refunded on this invoice is the employee contributions to the difference between the actual compensation and the revised compensation on the fiscal year that spikes. Remember, the employee contribution is 5% for non-hazardous employees and 8% for hazardous duty employees. To prevent the refund of the employee contributions from erroneously refunding months of service, KPPA spreads the refund out over the months worked in the fiscal year that spiked. The cost calculation details provide the employer the breakdown of the refunded contributions per month over the fiscal year. Once the invoice is issued, the agency has 30 days from the date of creation to pay the invoice. The due date can be found under the invoice details on page 1. Thank you for viewing the Member Pension Spiking Refund Invoice Training. If an agency has questions regarding any of their invoices, they may contact their ERCE team through the employer hotline.